How is everybody doing? Listen, as soon as I seen myself on camera, I started laughing. Wealthy trustees, how are you doing? Come
Woo! Amazing.
woo, woo! I'm super excited
Fantastic.
to see you. How is the wealthy trustee? Steve said, hi, Queen. Hi, Steve. Hi, Rhonda. Hi, Ken. Hi, Paulette. Hi, Coach D. Hi, Unique. Hi,
Hi,
Mr.
what's going on?
Terry. How are you? How are you?
This is Dario. I just switched up my name for YouTube.
Oh, I see. I see. Okay,
I took the
okay, okay.
privacy thing yesterday, so now I'm removing myself from the digital web.
Yay! Remove yourself. I'm excited. I'm excited. Hi, Celicia. All right. Well, I hope that you guys are doing well. So we have a beautiful masterclass scheduled for you today. So today's masterclass, we're going to be talking about OPM, other people's money, specifically the bank's money. So who wants to know how to secure funding with the bank? Who wants to know the ins and outs of how to look credible? Who wants to know how the business world works when it comes to business credit, right? Well, we got none other than Mr. Dorsey himself, one of my absolute favorite educators in this program. He has been in this industry for over a decade, and he has helped hundreds of entrepreneurs and business owners secure multi-millions of dollars in funding. Okay, when I tell you this man has like some phenomenal banking relationships, okay, like he will hold your hand and walk you into the bank. Okay, he says white glove service. Mr. Dorsey is the founder of the Funding Playbook, and tonight he's going to give you the playbook. Okay, so you're going to get a page out of his book. He is my favorite person. He is your resource. He is the trusted advisor when it comes to this space. And we absolutely appreciate him each and every time that he comes and educates us and pours into the community. So thank you so much, Mr. Dorsey, for being here this evening and for educating the community because they need what you have. You have the floor.
Good evening. Can you hear me?
Yes, loud as clear.
All right, man. What an amazing time we always have together. Tonight is going to be something special because I've started to roll out something different, right? So, like, I want to make sure that people really understand the full value of funding, not just necessarily how to just position themselves for funding, because a lot of people think that getting access to capital is the finish line. And really, I want you to start to think of it like that's not the finish line. That's just the standard that we need to know how to position ourselves into. But what
No,
we
no,
do
please.
with
Have a good
after
night.
the funding, what we do with after funding is what really matters, right? And so I'm going to break it down really, really simple tonight. I'm going to show you how to position yourselves to get access to capital and then ways to really think like a business owner and operate like a real business. So tonight is something really, really special. If you've seen any of our previous master classes, they're all in the community. There's a lot of great information in there. Tonight is going to be something much, much different. Not a whole lot different, but in my opinion, it's more valuable. And then you can use the piece tonight with the previous recordings, and that is your whole game plan put together. So as always, I am a visual person. I do have a slideshow presentation that I'm going to go over with everyone. If someone will just do me a favor and put a 1 in the chat, if you can see my screen and if you can hear me. Somebody do a 1. All right. Thank you, iPhone. Thank you, Steve. Thank you, Alexis. Thank you, Christina. All right. Welcome. So tonight, I want this to be one of the most valuable, if not the most valuable videos that you've seen all year. Now, I know that's tough to do, especially being in this community. Christina gives you a lot of great information. There's a lot of great educators. The reason I say that I want this to be the most valuable is because this is ultimately going to help you tie them all together. Christina is going to show you how to protect the assets, protect your estate. There's all kind of other, all kind of other educators here that teach you a lot of great things on how to make money, how to leverage money, how to protect yourself, right? And ultimately, I want to show you how to put that into an actual cash flowing machine. That's what we're going to talk about tonight. So tonight, as she mentioned, my name is Mr. Dorsey. I represent the funding playbook. And from capital to acquisitions, right? I want to show you how to position yourself for funding, but that's just the standard. I want to show you how to actually build a company that's worth buying, because business funding is a very popular topic and it's phenomenal for you, right? But the bigger play is, how do we actually use business funding to grow our business? And then once we start growing, how do we actually position ourselves to operate a system and operate a business so that we can expand, we can bring on help, and then to ultimately go into the highest level of business, where your exit strategy. Are you going to sell the business? Are you just going to have it run, automated so you have cash flow? Or do you eventually want to acquire other businesses, right? So I'm going to give you basically the overall perspective tonight and break it down really, really simple so that by the end of tonight, you can actually take action. Now, as she mentioned, we work with bankers, investors, lenders alike. We've done it for a long time. So I want you to understand there's a lot of videos, there's a lot of content on the internet. All of it may or may not be accurate. So tonight, I want to give you the most accurate, applicable information that is trusted by bankers and that is built for founders, right? So with that being said, I do have a disclaimer, right? I'm going to give you a lot of great information tonight, but this information is for general purposes only and does not constitute legal, financial, or professional advice to your specific situation. When it comes to funding, when it comes to positioning yourself for funding, when it comes to the way businesses operate, every situation is going to be different, and you always have to consult a qualified professional for guidance specific to your situation. Now, been in the funding game a long time, been funding businesses from startup capital to multi-million-dollar acquisitions, and I've never seen two deals the same, right? So something that we're going to talk about tonight, funding results are never guaranteed, but the strategies that we share here tonight are designed to help you improve your funding probability and actually position you to access capital, right? So with that being said, before we begin, I know that funding is a popular topic. Like I said, there's a lot of content out here. There's a lot of noise. And I want you to understand that by the end of tonight, you're going to have a much better understanding of funding, the purpose of it, and some ideas of ways that you can use it once you actually get access to capital. What I'm going to teach you tonight is the standard. Business funding and positioning ourselves for business funding should be the standard. It should not be the end goal. And so many people out here talk about funding as if it's the end goal, and it's not, right? So understand, I want you to keep it simple. You do not need to understand every funding product. Every funding product, every funding program is not necessarily applicable to you. You need to be able to understand and identify what your best funding path is and what the best funding products are for you, right? So number two, I want you to understand where you are today is not necessarily where you are going to end up. Some of you may be in a position where you're ready to get funded immediately. Some of you, however, may need to correct some things before you are positioned to go and get access to capital. It's okay. But number two, it's important for you to be honest And because the goal here, the objective here tonight is for you to identify what is helping you. So what's working in your favor, what may be stopping you so that we can identify and move it out of the way, and ultimately what happens next. Along with number two, I want you to understand when it comes to funding, the reason I talk about funding being the standard and we need to start operating like real business owners where funding is the standard, it's the bare minimal, is because understand lenders and banks are in the business of lending money, right? So I want you to understand this is not some far-fetched concept. This is where you pass by lenders and banks every single day, and all of them are in the business of lending money. We just have to know how to actually position ourselves in order to qualify for the funding that we're looking for, right? So that's very important. And then number three, I come back because I love this community. I love Christina. I love everything that she has built. But I come back not to just because I like to hear myself talk. I come back because I want to give you real value. I want to cut away all the BS. But it's also important that I really want you to take action, right? So number three here, be prepared to take action because you're going to leave with specific steps that you can actually begin to implement immediately, right? Now, why is it even valuable for you to be here? Well, this is what I want you to understand. By the end of today, probably the next hour-ish, we're going to spend together. If you can pay attention, you're going to walk away and you're going to understand a couple things. So by the end of today, I want you to understand 5 things. If you understand these 5 things, then I did my job right? So number one, I want you to understand why qualified business owners, why great business owners actually get denied funding, right? I want to take away all the myths and I want you to be able to learn from their mistakes so that you can position yourself better. Number two, most people come to me for funding and they're like, hey, I've got a 700 credit score. I got a 750 credit score, right? But when it comes to funding, I've been the one talking about it for years and a lot of people like to debate me, but the credit score really doesn't matter. It's a measurement of where you are, but most people think that credit score is the only thing that matters when it comes to funding. And I want to make sure that you understand it is not. We're going to break it down in detail tonight on what the difference between a credit profile is and what an actual credit score is. So what do lenders actually look at beyond the credit score? Because most people have really no idea. Number three, how to actually prepare your personal and business profile so that you can be in a position to qualify for the funding that you're looking for. Number four, I want you to know which funding path may actually fit your particular situation, because there's a lot of different products. There's a lot of different ways that we can actually position ourselves to qualify. And then number five, what capital should do once you receive it. Most people talk about funding like it is the end goal. Like I said, I want somebody to put in the chat, standard. We're going to increase our standard. Somebody do me a favor and put the word standard in the chat, because this is what it is. Business funding is the new standard. It is not the end goal, right? Thank you, Alexa. So you should know by the end of today, I want you to know where you currently stand and what your next move needs to be. Now, for those of you who may not know who I am, I want to give you a short introduction to who I am and why I'm even worthy for any amount of your time here tonight. So number one, I am a business funding strategist. I help entrepreneurs prepare for capital raises and execute funding plans by structuring strategic funding sequences. The other thing I want you to understand here, when most people think about banks, they know a handful of banks. There are over 4,000 lending institutions in the United States alone, and all of them have different preferences. All of them have different underwriting guidelines, and not all of them work the exact same, right? So understand this process is very, very strategic. The hardest part of my job is to determine out of these thousands of lenders that we could work with, which of those 2, 3, 4, 5 lenders would be the best overall lender or best potential lender for the client we are working with, right? So understand this is very strategic. Number two, I'm a business growth and M&A advisor. I manage a seven-figure consultancy focused on funding, business growth, equity consulting, and acquisitions, right? So very, very important. And then number three, I am a strategic negotiator. Like I said, all the years I've been doing funding, no two funding deals have ever been the same. It's the power of negotiation and structure. And I'm very skilled at structuring conversations and opportunities with banks, lenders, investors, partners, and buyers to find beneficial opportunities and plans for everyone involved, right? So very, very simple. I help entrepreneurs access capital and turn it into cash flow, infrastructure, and long-term company value. For those who don't know, you can find me at CEO Dorsey on all platforms, and I educate on this at almost every day. Now, enough about me. I just wanted you to know a little bit about who I am. And now let's help you understand why this class is going to be important to you. So the first question is always going to be, why business funding? Why should I be interested in, business funding? What is it, useful for? I don't know, right? So let's find out, because I want you to understand there are regular business owners and there's smart business owners. I want you to move to the other side and start always moving like a smart business owner, right? So smart business owners are very strategic, and they don't just know what they're doing, they know why they're doing it. And it's very important as we go through this process that you understand what business funding is, but more importantly, why is it applicable to you and how can it benefit you and your objectives? So understand, smart founders are going to position themselves to access capital before the opportunity or the emergency arises. Success loves speed. When opportunities arise, you need to be able to capitalize on those opportunities and position yourself so that you can take advantage of those. And I'm sure we've all heard the saying, if you stay ready, you don't have to get ready, right? And that is a very useful and valuable statement, especially in business, because often those who move strategic and are positioned to move fast when the right opportunity arises, those are the businesses that actually win, right? So why is business funding good? Why is it applicable? Number one, leverage. The key word here is leveraging other people's money in order to pursue our own interest or the business's interest on behalf of what we are looking for, right? So number one, grow faster. You can leverage funding to deploy it in things like marketing, systems, and staffing that scales your business. How many times as a business have you sat there and been like, oh, I would love to do, this marketing campaign or run online ads or be on this billboard or, do this promo, but you're not able to do it. Or maybe you need systems because your business is growing and it's actually outgrown its old system. And maybe because your business is growing and your systems are, growing, you actually need staff in order to actually service the clients that you have. These are all different ways that you can leverage capital in order to grow faster. The next section, acquire assets. Everything that I teach is leveraging capital so that you can deploy it into an asset. What are an examples of assets that we have worked with clients to help them get funded for, right? Real estate, very, very popular. Equipment. I had a conversation with a plumbing company today out of Texas. They have a growing plumbing company. They're looking for $1.7 million for equipment because if they upgrade their equipment, they can take advantage of this contract that would pay them about $5 million over the next 3 years, right? So equipment is something that people don't necessarily think about all of the time, but better equipment, more equipment allows you to do bigger jobs, right? So equipment, or one of my favorite, actually buying other businesses entirely. So these are just different examples of different ways that you can leverage capital. Of course, growing revenue. So we talked a little bit more about marketing, acquiring customers, sales capacity, and even being able to create new offers that you can actually bring to the marketplace. And then again, building capacity, building your business stronger so that it can actually handle more. So again, investing in things like teams, systems, technology, equipment, and operational infrastructure to make your business run like a professional business. Now, just as I've said earlier, capital and access to capital is not the finish line. That's where most presentations typically end, and I want to help you take it to the next level. So remember, getting funded is just the first move. It's the standard. We should make it a standard to know how to position ourselves for business funding, where it's almost the expectation because we are making the necessary steps to position ourselves to qualify for capital. But that's not the finish line. Again, once you get funded, what you do with it is the next most important part. So you're going to have the approval. We're going to talk about capital without a plan. And then we're going to talk about the difference for whenever capital has a job, right? So the approval, that's when you've positioned yourself. And also, I've said this before, but I want to make sure to cover it here. All of the work that you do for funding is done before you ever submit the application. So most people, when they think that they're working or they're doing funding, they think that they're just submitting a bunch of applications and that is doing funding. That is false. By the time you are submitting an application, you should know strategically why you are submitting that application and why that application makes sense based on your particular scenario. So that's basically the first phase. Once you actually do all of the work and you get the result that you're looking for, that is the approval, right? So getting funded is the first move. And it proves, the only thing that approval proves is that the profile was positioned correctly and it actually made sense for the lender to understand or approve the request, right? So you have step one, the approval. Now, once you have the approval, you have to give it a job, right? So for me, I try to look at capital like a team member, a staffing member, and I'm giving it a job to go and do something for me, right? So you have capital with a plan and you have capital that actually has a plan, right? So understand when you get funded, you also need to know why you are getting funded. You need to get funded for a reason. You don't just want to get funded just for the idea of saying that you have money, right? You want to get funded for a particular reason. And if you don't have a clear objective or plan for funding, then you don't want to actually get funded, right? Or if it's not in the near future. But you need to have a plan that funding is going to do, right? Because money with no assigned job becomes pressure. And that's not what you want funding to do. You want to leverage yourself and position yourself so that it's actually invested into the business so that it actually makes sense for the funding that you're looking for, right? So you don't want capital without a plan. You do want capital with a job. You want to have it actually given an assignment and work on behalf of you. So what does that look like? That is giving it a measurable outcome and timeline so that when you leverage or deploy the capital, it has a purpose, it has a timeline, and it has a result that it is expected to create, right? So just like I talk about, the approval matters, yes, but the approval is the new standard for the way that we are moving, and what the business does afterwards is what actually determines the outcome. Now, how do we position ourselves to get approved? We have to understand, in order to do that, we have to understand why other business owners get denied. I've seen great businesses, well-performing businesses, 6 figures, 7 figures, multiple 7 figures, 8 figures plus, get denied solely because they don't understand structure. Most people, when they think about growing a business, most people, when they think about funding, they only think revenue for business growth or personal income for themselves. That is not the only determinant for you getting access to funding, right? So let's talk about it. This has to be done before you submit the application, right? So we're going to talk about credit utilization and recent payment history creates risk. So it's important. Even though we're talking about business funding, I also want to take out a myth. When people start talking about business funding, a lot of times they say, hey, I want EIN, business funding only. I don't want my personal used at all. And I'll tell you, that's false. Generally speaking, that is false. I would love it if that was the case, because everybody would be getting approved, right? It would be the easiest way ever to just erase our mistakes and all of a sudden get all of this funding, right? But that's not the reality. And so when it comes to business funding, generally speaking, even if you have a great business, you have to look back at the foundation, which is your personal credit. There are ways that you can structure a business and it can be credible on its own to get business funding with EIN only, right? Without your personal being attached. But generally speaking, the foundation for most people to access business funding is going to need to be establishing your personal credit, right? Now, one of the key factors with personal credit is something called utilization. Now, what is utilization? Let me break it down very simple. Utilization is very simply the amount of credit you are using versus the amount of credit you have available, right? So let me make it simple. Let's say I had $1,000 credit card. If I was using $300 out of that $1,000, 300 out of 1,000 is 30%. If I'm using $100 out of that $1,000, I'm using 10% utilization. If I'm $800 out of $1,000, I'm at 80% utilization, right? So pretty simple. You just take your credit limits that you have available and you do the calculation based on what your utilization is, right? Now, key metrics, because I talk to business owners a lot of time and they have a misunderstanding that their available credit is just meant for them to use the whole thing. Yes, you do have the discretion to use your available credit, but a key component that you have to look at when it comes to getting business funding is you want to be minimally under 30% utilization. Ideally, you want to be less than 10% utilization. The lower the utilization is, the better your business or the better position you're going to be in to actually qualify for funding, right? So you want to know your utilization and your recent payment history. You need to have a good recent payment history established. Again, banks are absolutely in the business of lending money, but they want to lend money to applicants who look like they can pay it back or have the ability to pay it back. So we're going to talk about your utilization and your payment history. The next thing, too many inquiries or too many recently opened accounts. So inquiries, when you look at credit scores, inquiries don't affect your credit score very much, but what they do show is they leave a record of periodically when someone checks your credit. So even though inquiries don't affect your credit score very much, they show a history of who's checked the credit, and too many inquiries in a short period of time shows the lender that someone is actively looking, so it starts to raise concerns. I've had applicants who have great credit profiles. They have beautiful credit scores. They've got 750 credit scores. They've got all kind of years of history, but for some reason, they have recent inquiries. And yes, even though they have great credit scores and they have great credit profiles, they're not going to get approved if they have too many inquiries in a short period of time. So really whenever we're looking at credit reports, the key number is less than 3 inquiries within the last 6 months. That's where you really want to position yourself, right? Now, the other thing, when it comes to your information, you have to understand modern day banking is majority computers. What has to happen is you have to make yourself easily verifiable for you to access capital. So even things like your personal and your business information has to be lined up exactly everywhere it is listed. And even the smallest misspellings or the smallest structure being off can be the difference from you being approved for the funding that you're looking for because you're easily verifiable, and denied because you're not easily verifiable. And we're going to break this down a little bit more in just a few. Same thing about the business. if you're not able to be verified, it really makes it difficult or sometimes impossible for you to actually get access to capital. And the other thing is, like I mentioned, there are thousands of lenders in the United States alone. Most people only know a handful. And you have to understand that every bank has different underwriting requirements. They have different preferences. And so sometimes you might have a great business, you just go to the wrong bank. And there are some banks, for example, I work with lately, within the last like 6 or 12 months, we've had an increase of business owners who work with event centers, event planning companies, right? And so there are certain banks, even though they have a great business, if they go to certain banks, they're not going, even though they have a great business, that bank doesn't like event centers. And sometimes they go to the wrong banks, or yes, to the wrong banks with the right business, and they just have a pairing issue, right? So the other reason that most business owners get denied is because they go to the wrong lender, they're looking for the wrong product, and they're applying in the wrong sequence, right? So we're gonna make it very simple. Now, the solution, we have to start thinking like a bank. We have to start thinking like a lender. We have to position ourselves to look at ourselves on how they are going to look at us when we are looking for applicants, right? So remember, I know that a lot of people have potential. Your business has potential. You have potential. I believe it, right? And there's a lot of people I work with who have a lot of potential. However, when it comes to lending, bankers and lenders do not lend based on potential. They fund based on predictability. So you should know how to make it easy to understand who you are, how your business operates, how the capital will be used, and how it's going to actually be repaid, right? So how do we do this? With great recent history, you want consistent on-time payments. And when you are looking for access to capital to position yourself in the best position, you don't want any derogatory information on your credit reports or your business reports. What is derogatory information? Late payments, collections, charge-off, liens, things of that nature, right? Now, remember, if that's where you are currently, that's fine. But now you're going to get the information on how to actually provide a solution to your situation so that you can actually correct it, so that you can position yourself in the future. Sometimes when people look for funding, sometimes a no just means not right now. Just because it's not right now doesn't mean that it won't be ever, right? Everyone starts in a different position. Some people are ready to get funded immediately. Some people might have to wait a couple of weeks. Some people might have to wait a couple of months. Different people's timeframes vary, right? But when you understand how to position yourself, at least you can take the first step towards getting what you want to get to, right? Just how I talked about utilization, you want to show those data points of you being able to manage what you have, like that data point we talked about. We want to stay under 30% utilization minimally, ideally 20% or less, right? Consistent information, your name, your address, and your business information need to match everywhere. So we're going to talk later about reviewing your credit report. You would be surprised that how many of you, if you haven't looked at your credit report, some of you may be ever, some of you may be recent, how many different addresses or variations of spelling are on your name, right? And if there's mismatching information, it needs to be corrected, because again, if you're not easily verifiable, you're not going to get the access to capital that you're looking for. And you need to know how to have a verifiable business, basically making sure that the company is registered, that it's active. But even just a lot of people just have a business that's registered and active, and you have to actually know how to structure it professionally so that it is presented like a professional business. If your business is presented like a hobby, it's going to get treated like a hobby. If your business is presented like a business, then it's going to get treated like a business, right? So let's look at two examples. So you got two business owners that are looking for funding. You got business owner one, you got business owner two. So let's take everything I've said and just kind of put it visual. So business owner number one Both of them have great businesses. Their business has a lot of potential, right? They've got a lot of room to grow. They've got a lot of great ideas. They're looking for access to capital, right? So they go to the bank. Business owner one, they've got recent late payments. Their cards are maxed out near the limits. When they're asked for their addresses don't match on their ID or their credit reports or any of their paperwork. When they're asked for what they're going to use for the funds, so use of funds, they don't know. They just thought that the idea of, capital would be good. When they're asked for their documents, they're scattered, they're unorganized, and ultimately what happens is the result is it looks uncertain and ultimately it looks unprofessional, right? Now, then you got business owner number two, and this is where I'm going to show you how you position yourself to tonight. So you got business owner number two. They've got a clean payment streak. They've got low card balances. When they're easily verifiable because their names and their addresses match everywhere. When they're asked for what they want to use for the funding, well, they're going to do something like we talked about earlier. Hey, they want to use it for marketing. They want to use it for staffing. They want to upgrade equipment. They want to open a new location. There's a growth focused plan because they know not just what funding is, but they know what and why they want to do with it, right? When they're asked for their documents, they're organized, they're prepared, and they're professional. And ultimately, when you look at the difference between these, is that business owner number two looks predictable when business owner number one currently does not look predictable. Again, we want to get to business owner number two. That's what I'm going to show you how to actually do tonight. If you currently may be business owner number one, that's fine, because that's why you came here, so that you can get all of this information, right? So remember, banks do not fund potential. They only fund what actually looks predictable, right? Now, how do we position ourselves on the personal profile? Like I said, generally speaking, is it possible? Let me cover another thing. Is it possible to get business funding with just EIN? Yes, it is possible, but the business has to have substantial revenue. When I say substantial revenue, generally speaking, at certain lenders, it's going to be minimal 3 million to 5 million. Generally speaking, EIN, real EIN business only funding doesn't come in until you're doing at least 10 million in revenue and your business is easily verifiable. So is it possible to get EIN business only funding? Absolutely. Generally, for most people, that's not an option initially. So just like I said earlier, you have to know how to position your personal profile so that you can lead the business the right way, right? Excuse me. So remember, banks look at your full picture. They do not just look at your credit score. That is very important. I said it earlier. There's a lot of people who come to me all the time. Dorsey, I got a 700 credit score. I got a 750 credit score. But when you look at their profile, they don't have a whole lot on there, right? And that's what we call a thin profile. So you have to actually build out the profile of your credit profile. Now, here are the things that actually matter when you're looking at your profile, right? Number one, payment history. Like I said, banks and lenders are in the business of lending money. However, they need to see the history of you being able to pay them back, or the applicant to be able to pay them back, right? So let's say, for example, let's make it relatable. I'm sure we know someone, or we know someone who knows someone who always borrows money, right? Might have an uncle at the cookout, right? And they might, he might be a great guy. He's a great guy. He talks, he's good, right? Cool dude. But what happens is that when they have a history of borrowing money and they say you're going to pay you back, but then they don't. And then it comes to a history with this person where it's like, hey, all right, I might give you some money, but I'm not even going to expect to get it back, right? What happens is we start to build a pattern based on that person's historical actions on whether we expect to be paid back or not, right? That's the same way banks work. Banks are using our credit reports, whether they're personal credit, business credit, or both, to determine is this person's historical actions reliable enough for me to lend money to? So number one, payment history. We have to have a good payment history in order to show lenders that we are good applicants. That's number one. Number two, just like I talked about earlier on the utilization, and I broke down utilization, you have to keep those balances low. The key metric and the key data point is under 30% minimal. The lower you have your utilization on the front end, typically the better the results are on the back end, right? So that's number two. Number three, matching information. Your name and address needs to match everywhere. At the bank, on your credit report, on your IDs, right? You need to be easily verifiable if you are going to look for access to capital, right? Number four, account age. And this is important too. The older the history, the longer the history, the more reliable someone looks. So number four is account age. Older accounts look better. And so you want to avoid opening too many new accounts before you're actually applying. Remember, everything here has to be very strategic. Number five, we touched on a little bit earlier. You want to be able to limit those inquiries. You want to limit those inquiries. You want to avoid unnecessary applications. When you are submitting an application, just like I talked about, you should know what the reason is, and you should know why you are doing it. And you should know preemptively, based on the information that I'm giving you here, that you are actually in a position to qualify for the application or funding that you're looking for. You should not be submitting an application and guessing. Like I said, most people think funding is just the more applications I submit, the more funding I'll get. That is false. Everything about funding and positioning yourself for funding has to be very strategic, and nothing happens on accident. And number six, you have to be organized. You need to make sure that you have your documents ready in a clean folder before you walk into the bank. And I'm going to show you tonight what documents you need to take with you and what questions you need to ask the banker. Now, here's the next thing. We have to make your business easy to verify. So let me have a disclaimer. I know that this is a trust class. Christina teaches you how to build these amazing trusts, have great structures, and be able to protect your assets, right? Now, I can only teach you what I do and what I help other business owners do, right? There are a lot of ways that you can get things done. I can only tell you based on experience, right? So the reason I say that is because the way that I understand how to operate my trust when I build a private trust is I want my private trust private. So what I teach personally is to leverage public entities such as LLCs or corporations to position for business funding to operate in the best interest of the trust, right? So this is the way that I teach. Now, understand, again, funding is never guaranteed. Everything I teach you how to do is how to position yourself for the highest probability. But what happens here is I'm going to show you how to position your business like a professional business so you don't get treated like everyone else, right? Again, we want to operate like smart founders. We want to operate like real businesses. We want special treatment. We want to be treated differently because we speak the bank's language. Now, number one, if you're going to look for business funding, you're going to need to have a real business, right? So you're going to need to set up an LLC or a corporation within your Secretary of State. So what is the Secretary of State for those who don't know? It is the register entity where everything goes on public record for state entities. So every state has a Secretary of State, and you will go to that Secretary of State in order to open up your business. If you're in Florida, you can Google Florida, Secretary of State. Arizona, Secretary of State. Texas, Secretary of State, right? And you can go establish your business. Now, key thing, I like to leverage other people's money, but I also like to leverage other people's time and also other people's resources. So one of the resources that we use for all of our clients, you have the option where you can go open up your own business. They're in the Secretary of State. You can go on YouTube. They've got a bunch of great videos. For me, I try to maximize my time. So one of the resources that we use for ourselves and the resource that we refer all of our clients to is a website called zenbusiness.com. That is Zen, Z-E-N, business.com. The reason that we like Zen Business is because when you go to Zen Business, you have the option where they will set up your business and only charge you state fees. That means they don't charge you extra fees on top of it to file the business. They will only charge you the state fees. Now, they try to make money other ways for like upselling certain documents, but those are documents that you would need anyways, right? You also have access to the internet. There's a lot of great connections in this community. I'm sure they can help you get the documents and things of that nature. So you would go to Zen Business. I like to use Zen Business because I give them the business information. They file it for me. They let me know when it's done, and I didn't have to pay anything outside of state fees, and I didn't have to spend the time to actually do it, right? So you're going to get your LLC or your corporation set up. Once you do that, you're going to go to irs.gov. You're going to get your EIN. Again, Christina shows you how to get the EIN for trust. Very, very similar process for LLCs or corporations. And guess what? The great world of YouTube can show you how to get your EIN for your LLC or corporation in a couple minutes. Something I like to mention, please, you don't have to pay someone money to set up your EIN. Just do it. It just takes 2 or 3 minutes, right? It really doesn't take a lot of time. And over the years, I've seen a lot of people charge a lot of money. I've heard some crazy numbers just for them setting up an EIN, right? Very, very simple. Now, the next thing you want to do is you want to have a professional email. Now, if your business is ABC Consulting, as an example, it looks a lot better for you to own the website. So let's say it's abcconsulting.com, abcconsulting.net, right? abcconsulting.info, something. Because what you're going to do is what we like to do is either use Google domains or a website called GoDaddy, and you're going to buy your business website. They list it on there, right? Now, when you buy your business website, you're going to connect it through Google domains, and now you're going to be able to set up your email address at your website. So if your website, for example, is abcconsulting.com, now you can set up your email so that anytime you send an email to someone, it says your name at abcconsulting.com, right? It looks a lot more professional than abcconsulting165237@gmail.com, right? Looks a lot more professional, looks a lot more presentable. And it's when you have that first impression with the banker, they're going to be like, oh, this person runs a professional business. They don't look like most of the businesses that come through here. They look different because they're set up professionally, right? Now, you want to have your business address. Now, can you have your home address as your business address? Yes, you can. It is an option. The number one thing that I personally don't like my addresses at my business or my business address at my house address is because, generally speaking, for most Secretary of States, besides like 2 or 3 states, your personal address would be on public record. So one thing that I like to do is leverage something like a real address. So what I do, I live in Orlando, Florida. So when I would go to my city and state, Orlando, Florida, go to Google, type in my city and state, and type either the words executive suite or executive office. The reason that these are nice and the reason I like these is because you get a street address, you get a physical street address attached to a suite number. So you can keep your home address private, and it looks a lot better, let's say, when you're talking about your business or you're presenting it to, customers, or you're presenting it to the bank. Looks a lot more professional to have a street address and a suite number than just your home address. The other thing is, when you're growing a business, you definitely don't want your customers just knowing where you live, right? So go and get a business address, go legit. A business phone is another thing that you want to do. You want to separate yourself personally and business wise. So you want to get a business phone. Yes, if you have a need, then you can go to your current carrier. You can get a business phone, but you don't have to do that. There's a couple different services that we look at. They're called VoIPs, voice over IP. The reason that these are amazing is because you can connect them to like your cell phone, and you can have your business number. So when you give the bank or you give a customer or you give a client your business number, they can call that business number, and they only communicate with that number, but it will forward to your phone. So it's like you have another phone, but you actually have, it really just runs from your business, right? So you want to have a business phone number separate from your personal. Next part, you need to have a business bank account. When you open up your business, you have to open up a business bank account. I've consulted so many business owners over the years who have a great business who don't even have their bank account set up, right? You have to have the bank account set up. It puts you legitimate. It's a way to track, makes it easy and professional for you to also build relationships with banks. We're going to talk about that a little bit more in just a couple minutes as well. And you want to have an online presence. This is a digital world. When you have a business, it needs to be, again, easily verifiable. So how do we do that? We can get a simple website. You want to have a Google listing, and you need to have some active social media profiles, right? Now, websites. You can use all kind of AI sites now to make you a website. Claude is a great program. There's a lot of other ones out there. When it comes to websites, you do not have to have this amazing top of the line website. At bare minimum, you can just have a one-page website that has a picture of you, your business logo, some information about your business, and then some buttons so that people can actually contact you, right? You need to show that your business is real. You also need to be able to show that the business is verifiable. So this is something that I want you to look at visually, and this is something that I want you to use to rate yourself. So this is a funding readiness check. You're going to rate yourself a 1 to 5 in each category. You will have this recording, by the way. I want you to rate yourself based on where you are, and you're going to evaluate yourself. So based on where you think you are currently, based on your recent payment history, you're going to give yourself a 1 to 5. Inquiries and new accounts, based on everything I talked about, you're going to give yourself a 1 to 5. How professional your business is set up, not just established in the Secretary of State, but actually set up the right way with the professional address, with the emails, with the business phone number, right? Clarity around your use of funds. Again, I cannot harp on it enough. Anytime you get access to capital, you need to know what you are doing to deploy it. When it comes to utilization, you need to rate yourself there. Remember the key metric, under 30% utilization minimal, less than 10% is optimal. Also, personal income and business revenue. Credit is great. There's a lot of great credit-based programs out here, but at the end of the day, you need to have income in order to be able to service the capital that you're looking for. So you need to evaluate personal income and business revenue, especially when it comes into consideration for your funding request. So it goes back to use of funds, along with comparison of the income or revenue, and then the document organization. Remember, you want everything organized professionally. Now, you want to note what your strongest qualification is. You need to know, even if there are other parts that need work, you need to know the foundation, what you are building from, right? So you're going to write down what your strongest qualification is. You're going to write down what your largest obstacle is. It's just a temporary obstacle. I'm going to show you a lot of ways that you can get past those obstacles. And then you need to write down what the first action you need to take is. As long as you take the first action and you're consistently while executing on those actions, where you are today, whether you're ready to get funded immediately, whether you got to fix some things to get in a position to get funded, taking the first step is the most important step, right? So I hope that this is valuable. I want to make sure that everyone is kind of still here. If somebody is here and you're finding this valuable, do me a favor and put a 2 in the chat for me. Y'all do that for me, and I'm gonna sip my water really quick, and we'll get right back to it. There we go, there we go, there we go. Bunch of 2s in the chat. Okay, okay. Thank you, Christina. Thank you, Rhonda. Coach D, Moto, D Palmer. Thank you, thank you. All right. So now we're gonna lay the foundation, and now we're gonna start to look at ways for how we actually access capital, right? So there's a couple different ways that you can position yourself for capital. So there's really one more that I'll talk about here as well too that I actually didn't put here. But there's basically 3 starting points for capital, which is credit-based. So a lot of what I've talked about so far is credit-based financing. You can also look at options for income or revenue-based financing. There is acquisition financing, which is one of my favorite. And then one that's not listed here is asset-based lending as well too. I'll just kind of give you a little bit of insight to that just in case that that's applicable to you as well, right? So credit-based financing is basically what it sounds like, right? So it is when the owner has strong personal credit, but the business may have a limited operating history or revenue. So again, remember, like I said, banks and lenders lend on predictability. So let's say, for example, you have a business, it's relatively it might not be performing to the way that you wanted to, might not have revenue, right? But you have these opportunities, and if you can access capital and you can capitalize on those opportunities, it could dramatically change your business, right? Depending on what your setup is. So in those positions, a lot of times people have businesses, they might not be strong enough as of yet, but they got a strong personal credit score. And I've talked to a lot of businesses who are struggling just because they don't realize that they can leverage the strength of their personal credit to get business funding. Now, how does that work? The bank says basically, hey, the business is new. It's not really performing as of yet, but because you're the owner, because you're the operator, we're going to look at your history and see what you've been able to manage. And if we determine that what you've done is good, then we can help you get some business funding, right? So now you can actually capitalize on these things. Sorry, that's one of the highest forms of leverage that even new businesses can access, right? So that's credit-based financing. Then you have income or revenue-based financing. So this is when you go into another level. This is when you have documented income or documented revenue that you can leverage in order to get access to capital. Now, typically when we're talking about minimal, when you're looking at something like income-based or revenue-based and you want to have a less, not saying no impact on credit, I'm just saying less of an impact on credit, is you can look at income-based financing or revenue-based financing. Income-based financing on the personal side, I would say you want to minimally be looking at like 70,000 if you've got some challenges on the credit. If you've got great credit and you have lower income, then really stick with credit-based financing. Revenue-based financing on the low end, I would say probably $10,000 a month for the business on $100,000 a year minimally. Really, to be in a better position, you want to be doing like $10,000 a month, so $120,000 a year or more for your business when you want to look at other like revenue-based options. And then one of my favorite is acquisition financing, where it's basically you can get financing based on the performance, the historical performance of an already operating business, right? So this is when you can acquire businesses that are already operating, and you can acquire their revenue, their cash flow, their assets, and their operating history, and you can get lending based on that. Now, the other option here, and it's really a fourth option, but I didn't put it down here, is asset-based lending. So I work with wealthy clients. Some of my clients are very, very wealthy. Sometimes these clients have portfolios. They might have a stock portfolio, they might have retirement accounts, they might have real estate, right? And for certain reasons, they may not want to sell because it could incur tax liability, right? Not tax advice, just giving you some ideas. So instead of them selling their stock portfolio or selling their real estate in order to access the capital, they can borrow against the asset. And a lot of times, if you're doing asset-based lending, even though I talk about credit-based financing, a lot of times when you're doing asset-based lending, it's so largely secured by the asset that a lot of times either there is a very low and then sometimes a no credit check because the asset fully actually secures the lending. So those are really kind of the different ways that you can look at starting points to actually access capital, right? Now, types of funding. In business funding, the most common request that I get is a business loan. Hey, Dorsey, I heard about business funding. I want to get a business loan. And you have to understand that your request and what you qualify for are two different things. And we have to know what products are best for our particular situation to actually qualify for that particular product. And not every product is the same, right? So there's a couple different products we're going to talk about. If you look on the left, we're going to talk about business credit cards. We're going to talk about business lines of credit, the revenue-based financing, SBA loans, and term loans. So the other question I get is, what is the best product? There are products that I prefer for my particular situation, but there's not necessarily a best product out there. There's a best product, in my opinion, depending upon your particular situation, right? So we have to understand what different products are useful for. So credit cards, business credit cards. I work with a lot of real estate investors, specifically a lot of fix and flip investors, right? When they learned the power of 0% business credit cards, a lot of them were like, excuse me, a lot of them were mind blown, right? So for example, a credit card is useful for 0% introductory rates and fast working capital. So what most people don't realize, or what you may not realize, is, like I said, there are a couple thousand lending institutions in the United States alone. A lot of them on their business products for their business credit card will offer a 0% introductory period, right? Now, that period can range anywhere from about 6 to 21. Some banks I work with do like 24 months. I would say on average, it's going to typically be somewhere between 6 to 12 months, right? So what that means is that a applicant or a business owner can leverage access to capital without paying interest on the capital that they have for that introductory period. So for example, if you are deploying capital in something that has a short-term investment, i.e. less than 6 months to a year, you can leverage this product without actually paying interest. For the fix and flip investors, so for an example, for the fix and flip investors we work with, they're typically in a flip 3 to 6 months. So what most of them used to do was go to hard money lenders. They might be paying 10, 20, 30% interest or higher, depending on the structure of the deal. And they might be giving up equity in the deal just because they weren't aware of certain products, right? So business credit cards are good for the 0% introductory rates and fast working capital. The next one of my other favorite products is a business line of credit. So a lot of people hear about HELOCs, which are home equity line of credits. My favorite product, or one of my other favorite product, is a business line of credit. Works the same exact way as a HELOC, except the difference is it's on the business side. So if I'm using a HELOC and I'm maxing out my HELOC to go and invest in real estate or acquire businesses or do whatever the case may be, that utilization, that product affects my utilization on the personal side. If I do that same exact thing on the business side, very, very similar product, but now my utilization isn't being penalized, right? So a business line of credit is good for to have flexible access to a line, and you can draw what you need when you need it, and you can write checks against it, and you can do bank wires with it. So that's why I like business lines of credit. That's another great product. Revenue-based financing. So revenue-based financing is good for you. Well, for one, if someone has challenges on their credit, but their business has revenue, they can look at revenue-based options to still get access to capital. Now, revenue-based financing, in full transparency, is not usually a really long-term product. It's more of like a quick cash injection into the business based on its business revenue. So let's say you need to cover contracting or a deal, and maybe it's less than like 3 to 6 months, definitely less than a year, then you can look at revenue-based financing as an option, even if there are challenges on the credit. There's a lot of lenders out there that will look at the revenue for the qualification. SBA loans, another one of my favorite programs. The other thing I want people to understand is that most people think that SBA is a bank. It is not. Different banks offer SBA programs, but SBA is basically, in simple terms, it's basically insurance to the bank. So there are programs for that the government basically guarantees that loan based on their underwriting process, right? So SBA loans are great, much longer underwriting process than most products out there, but they're great for larger amounts with longer repayment terms. So I like business acquisitions. We use something like SBA 7A a lot. And then when I work with a lot of commercial real estate investors, they'll look at something like SBA 504, and the SBA recently combined both of those products together so that you can benefit from both of those benefits. You also have term loans, which is basically what most people request when they're looking for business funding, is a business loan. When you're getting a business loan, it's great for fixed, predictable monthly payments because you know how much access to capital you're getting, you know what that payment is on a monthly basis. But again, that's for more of an established business. Generally speaking, a startup business is not getting access to a business loan. So we have to look at other products for where that business is, right? So understand that the best product is not always the largest approval. And that's what most people believe. It's the capital. Oh, hold on. My apologies. This was supposed to be, I was supposed to have D&D on. Hang on. My apologies. Hang on. Someone called me and they were not supposed to. Hang on. They called me and messed up my stuff. Hang on. Oh, no. Hold on. Give me like 30 seconds. My apologies. Hold on. What happened? Let me close that out. My computer was supposed to be on D&D. All right, let me see if I can get back to it. Oh, wow. All right, give me just a moment. I've got to re-pull up the whole thing. I cannot believe that. All right. My apologies. Okay, if someone, there it goes. All right. All right. Where'd it go? All right, right here. There we go. All right, my apologies. That was not supposed to be there. I was not supposed to have calls come through. All right. And of course, any questions, I will leave time at the end in order to answer questions. All right, there we go. We're back in motion. So understand the last thing I was saying is that this is why you have to be very intentional about what products you're looking for and why you're actually looking for funding, because depending on your situation and your overall objective, sometimes most people think that funding is always going to be the largest approval. It's not. Sometimes you have to compare different products or build certain history and certain relationships with banks so that you can qualify for the next phase for what your overall objective is. So understand that the best product is not always the largest approval. It's the product that actually matches your job in both the short term and the long term. So every business, every objective is going to be a little bit different. You have to know which products are actually going to be applicable to your specific situation. Now, relationship banking. What does that mean? The way that we build so banks now are relationship banking. The time of just going online or starting a banking relationship and getting a whole lot of money, been in it for a long time, that time has really come and passed, right? So for the majority, of course, there's a couple different banks out there that you can, you don't have to have as strong of a relationship with to get access to capital, but those are the exceptions to the standard. That's not the standard. So relationship banking, banks want to see you establish a relationship with them and have accounts with them to lend. So they're going to prioritize those who are interested in them for what they are going to lend, right? Kind of like dating. Relationship banking now is kind of like dating. You want to show interest in them. And as you show interest in them, then they start to show interest in you, right? And they're going to prioritize the one who actually takes them serious, has the account set up, right? All of these things. So what is relationship banking? How do we start a relationship with the bank? You have accounts with them. So you have either checking accounts or savings account with them. I cannot believe it. Hold on. Wow. Oh, they're calling in the background. Hang on, that group chat. It's supposed to be closed. Oh, no. All right, hold on. Wow. Hang on. I've never had this many technical difficulties. Give me just a moment. My phone was supposed to be on D&D, and my computers are supposed to be on D&D. Okay. Let me get back here. Oh. Where'd it go? All right, let's do this. My apologies. I've never had calls really come through like that. Okay. Let me get back to it. Okay. So, relationship banking. Where'd it go? All right. So, relationship banking. So, how do we, if I end up losing it again, I might just have to go off the dome, but I'll try to make I try to make it visual. So, relationship banking. You establish relationships by establishing accounts with them and also utilizing their products. What are their products? Credit cards, loans, auto loans, mortgages, CD accounts, investment accounts. These are different ways that you build a relationship with a bank. Now, when you go to a bank, you want to separate yourself and you want to speak at a higher conversation than most of the owners that they talk to, right? So we want to talk about what to bring. We want to talk about the best practices and also what to ask. This page is one of the most valuable pages that I'm going to talk to you about tonight. So what do you bring? You want to bring a clear business explanation, an elevator pitch. Understand, when you are speaking to bankers, you want to be classified and treated like a professional business owner, right? So someone who is experienced in explaining their business is going to do it in a very short and direct manner. They're not going to have this long, drawn out, fumbly kind of speech that's all over the place. No, you want to speak from experience. If you've got to practice at home in the mirror before you go, whatever it takes, right? But you need to have a clear and direct business explanation. Think of it like an elevator pitch. This is 3 to 5 sentences. That is it. If the banker or the bank needs more if the bank or the banker needs more information, they're going to ask you, right? Now, deposit funds. When you open up a bank, you want to take deposit funds. Now, the more deposit funds you have, the more stable your business looks, right? But let's say you're in a position and you don't have a lot of money, but you're going to open up this business account. At least take some cash with you. Do not open up a business bank account, and when they ask you for deposit funds, you say you have nothing. If worst case, all you have is $20, go to the bank and tell them, hey, this is all I have cash on me. I'll come back later and make a deposit. At least everything else was presented professionally and you made the deposit. Very important. I've talked to all kind of business owners who have opened up bank accounts and they didn't even make a deposit in it. That's not what you want. So take your deposit funds with you. You need to have your personal ID and you need to have your entity documents. So when you open up an entity, when you establish your business in the Secretary of State, like I talked about earlier, you're going to get your articles of incorporation, your articles of organization. You want to have that plus your EIN letter, and those are the documents at least you're going to take with you when you open up the bank. Now, best practices, very important. Keep it short and direct. A banker hears a lot of conversations all day. A lot of people ramble, right? So you want to separate yourself. You want to be short and direct to the point. You want to focus on long-term relationship. Hey, I want to open this account because I'm expecting my business to do this, or I want to set up this over a year, 2 years, 5 years, 10 years. Focus on the long-term benefit and relationship with the bank. Show up early. When you have an appointment, show up early. Do not show up on time. If you show up on time, you were late, and you never with a banker for that first impression, or really ever, you never want to show up late, right? Very important. You're going to use an accurate industry classification for the business. The industry that your business gets classified in will preemptively determine how much funding you get. Certain industries are more risky than other industries. And remember, if risk goes up to the bank, the probability of getting access to capital goes down. So you want to make sure that you have an industry and a bank that actually works with your particular industry and the questions to ask. This is always better to do before, or some of these are better to do before you go to the bank, but when you're at the bank, these are the questions to ask to understand what bank is going to be the best bank for you. So remember, we talked about credit. When we talk about credit, there are 3 personal credit reporting agencies that we talk about. There's TransUnion, there's Experian, and there's Equifax. Most people assume that all banks, or that a bank pulls from all 3 of those credit reporting agencies. Generally speaking, that is false. There are banks out there that pull all 3, yes, but most banks will pull one of the credit bureaus or 2 of the 3, and most banks will not pull all 3, right? Now, the reason this is important, because when you look at your credit report, you're going to see different information on each credit reporting agency. So let's say, for example, you have a good experience with clean history, low utilization, no derogatory information. But let's say in this scenario, you've got some negative information on TransUnion and Equifax. It's important that you ask which credit bureau the banks pull, because you want to prioritize banks that are going to pull from your best bureaus, right? I hope that makes sense. If you have questions or if that doesn't make sense, notate that, and I'll make sure to answer that at the end, because you want to prioritize banks that are going to pull your strongest bureaus or your strongest information, right? You want banks to see your good information. If there's bad information, you don't want to see them, right? So how do you determine, even when structuring sequences, how do you determine which bureau the banks pull? You ask them, and a knowledgeable banker will give you that information. The other question to ask is, can you apply for multiple products? Most people assume that when you go to a bank and you apply for one product, that maybe you can't apply for another product within the same inquiry. If you ask the bank, a lot of times there's people who leave a lot of money on the table just because they don't ask this particular question, and they don't know that they could get a credit card and a loan, or a credit card and an auto loan, or an auto loan and a mortgage, right? With the same inquiry. So it's very important that if you want to look at maximizing funding, that you ask the lenders, can you apply for multiple products specifically with the same inquiry, right? There's a lot of money that gets left on the table because they don't ask that question. The next, you want to go in prepared. You don't want to go in and not be prepared. So the fastest way to find out what documents they need before you go into the bank is to call them. Google and call them and ask them, hey, I'm coming in to open up a business checking account. I'm coming in to open up a savings account, a retirement account, an investment account. What documents do you need when I get there? Because if you're prepared ahead of time, now you're going to build a much stronger relationship with that bank, right? And then what's the timeline? The timeline, you want to ask them, because it's relationship banking. Some banks allow you to apply immediately. Some banks allow you to apply for their products without having an account, but some banks make you have an account for X amount of time before you can actually apply for a product. So if you're someone who needs funding in the short term and you go to the wrong bank and that bank makes you wait longer to apply for their products than that fit your timeline, then that's not going to be necessarily the best bank for you. That's why choosing banks is very strategic when you're looking for access to capital. And these kind of questions actually matter and affect your sequence, right? So if you haven't figured this out as of yet, what I want you to understand is that funding is a system. It is very specific. It is very methodical, and nothing happens at random. If you missed it when I said it earlier, most people believe funding is just submitting an application. That is false. All of the work is done before you ever submit an application for funding. And by the time you're submitting that application, you should know that you are in a great position, or the highest probability possible to get the funding that you're looking for. So remember, funding outcomes are engineered through structure, lender fit, sequence, relationships, and timing as well too, right? So you want to review your complete profile before applying. You want to identify the strongest qualification path and match the profile with the right institutions and products. And you want to apply in the right order. And then you want to review the results before your next move. Everything about what we do has to be data-driven decisions. So remember, more applications do not automatically create more approvals. A stronger sequence of those applications and the banks that you choose are what actually engineer the outcomes, right? Now, remember, getting access to capital is the standard, because capital is only powerful when it actually has a job, right? So there are 4 jobs that you can use access to capital for: stabilizing, producing, building, and acquiring. So this is what you want to focus on: stabilizing. When you stabilize, you need to protect your current operations, you need to resolve immediate constraints, and you need to position yourself to improve cash flow once you get access to capital. Then once you stabilize, now stabilizing is first, because if you don't have a solid foundation, stabilizing is your foundation. And if you don't have a strong foundation, all of the growth that you start doing on top is going to start creating a problem. So you stabilize first. Once you stabilize, then you're going to start producing. You're going to invest in things that generate revenue, generate brand awareness. You're going to invest in marketing. You're going to invest in sales, products, and activities that actually generate revenue for the business. As you start to build, as you start to produce more, then you're going to build the business more. Now, you're going to create systems. You're going to hire team members. You're going to purchase equipment, and you're going to increase capacity. And then once you start actually building, then the next phase of business is acquiring. Acquiring, which is purchasing other assets, purchasing customer relationships, other capabilities, other team members, other people who are better at doing your job than you are, or some of my favorite, even acquiring other companies, right? So where you are in business, when you get, the reason I break this out is because everybody's first step to getting funded is different, but everybody's first step after they get funded is different as well too. And you have to know which of these boxes you are in, because if you go from stabilize straight to acquire and you don't actually have the revenue or the team or the systems in place, then guess what? That's going to create a headache. So you have to move methodically even after you have access to capital, and you have to know which one of these boxes that you're currently in and which box you're start in that's going to create the highest return. So something you don't necessarily have to answer today, but now that you visualize this, is I want you to think about when you get access to capital, if you were to get access to capital today, which one of these boxes would actually be your starting place, right? Now, really quick, I did not mean to, I got to go back. Okay, so based on everything that we've talked about so far, structuring businesses, how to actually get yourself in position for capital, looking at the profile of your credit report, understanding relationship banking, right? All of this is a system, and what you do with it, what you do with it is actually what matters most. Now, the next thing I wanted to show you, just because again, when I talk about business, I understand that everybody's starting point is different. I've said it. Some of you are ready to get funded today. Some of you may have to figure out a couple things before you're actually in a position to get access to capital, right? So I want to show you there's 3 success stories that I like to talk about whenever I do present, because they show different business owners at 3 different levels, regardless of where you are today. Now, before I show you these stories, remember, as I've said, of all my years doing funding deals, I have never seen 2 funding deals the exact same, right? But they're a testament to the process and following a system when you are willing to take the steps, right? So my first success story is, I like to talk about Marcus, right? So Marcus is one of those that, again, he basically saw online about, being able to get access to capital, heard that it was, possible, but he didn't really understand what it took and what it takes to actually get funded. So the difference is there's information on the internet that is for entertainment, and then there's education on here for actually implementation, right? So Marcus, unfortunately, was the first half. He saw a lot of these information, the YouTube, the TikTok, the 30-second videos that say, hey, go to this bank, get 50,000, go to this bank, get 100,000, right? And basically what was happening is that Marcus was doing that, but he didn't understand the things that I taught you today. He didn't understand what his profile needed to look like. He didn't understand relationship banking. All he saw was go to whatever bank it was, submit, and you get approved. And ultimately, that's not true, right? So basically, the problem is that Marcus had already been, he came to us, he had already been denied at multiple banks. His reports were outdated in information. He had names all over the place, address all over the place, high utilization, recent late payments, wasn't able to be verified at all. Ultimately, what we did was we came through a class like this, helped him identify where he currently was, gave him the resources so that he could correct his outdated information, lower his utilization, and ultimately begin to rebuild his profile. Now, the reason I like Marcus's story is because it's an example of, it's not necessarily where you start, it's about where you finish if you follow a process. Now, no, this did not happen overnight for Marcus. This process was about a 9-month process from start to finish when he initially came to us for what he had to do in order to actually get approved. The outcome, by following the steps and everything that I taught you here today, he was able to go to the current #1 bank in the United States. He was able to get 75,000. If you look over to the right, from one bank, he was able to leverage that 75,000 for his particular business. It was applicable for him to get a 0% business credit card. He was then able to launch a business, purchase equipment, and he was able to invest into marketing, all without actually draining his savings, right? So he was able to start a business, create cash flow from someone who didn't even think that funding was possible. So that's why I like Marcus's story. Now, Michael's story. Michael is different. Michael is a 7-figure entrepreneur, very, very successful by all means, very well performing base business. The problem for him is that he wasn't paired with the right bank. Had a great business, had great credit, wrong industry match with the lender, right? And so ultimately what he thought, he heard about relationship banking and was familiar, but he didn't know that different banks prioritize certain industries. And so basically the assumption he had his bank was the all-in-one bank form, assumed that that bank would be able to give him everything that he had wanted. He'd built relationships with them for years. He'd run millions of dollars to them, right? The problem is that with that bank, they didn't support his particular industry, would gladly open up the account, but they considered his business or his industry risky. So ultimately, he found us. We helped him position his request with a different bank, helped him identify a lender that actually aligned with what he was looking for, helped him organize his documentation, helped him clarify how the capital would be deployed because he was working on an acquisition. And if you look over there on the right, he was approved for a little over 300,000. He actually only ended up needing to take 300,000, and he was able to do so and able to use that capital in order to complete an acquisition that he was looking for, right? So sometimes you as a successful business owner, you might not be getting the access to capital that you're looking for just because you're paired with the wrong bank, right? And then the last one that I like to use is my guy, Eric, 10-year entrepreneur. So there's a couple reasons that I highlight this. Eric is a 10-year entrepreneur. Anyone who knows anyone who's been in entrepreneurship, there's tremendous highs and lows, right? So to be an entrepreneur for 10 years is a testament to his character. Now, the challenge with Eric is that he was completely self-funded because he didn't understand that banks you can leverage banks, right? He was always taught basically leverage is bad, debt is bad, banks are against you, right? And he thought that by going to banks, he was going to lose control. So the problem is that his business was growing, but his personal cash and time became really more of a constraint. So what we helped him understand is that how business funding and how business financing can be used as leverage, because right now he has demand, but he doesn't have the capacity to actually capitalize on that demand. So we helped him understand how to position it as leverage, helped him position his business and credit profile the same way that we talked about tonight. And ultimately, we helped him choose a bank. Now, one of my favorite banks in the Midwest, it's called Key Bank. The reason I highlight this is two reasons. A couple of reasons. Eric was someone who didn't believe in funding or leverage at all. And I love working with non-believers and helping them realize and helping them become a believer, because then they become a advocate for services, right? So a couple things. Eric was not a fan of banks. We helped him restructure and understand how to position himself for access to capital. And then we helped him understand. Remember how earlier I said that one question by asking banks if you can access multiple products with the same inquiry or at that bank in general? So if you look over here on the right, he got a $50,000 business line of credit, a $40,000 business credit card from one bank, just because we understood positioning and what their underwriting rules are. As an example, most business owners don't think to ask that question. They just never were, they were just never aware of it. And some other business owner would have gone there and they would have got one of those products, not realizing that they could get the other one, right? So that's why I like this example, because all of them start at different areas. Now, we've talked about a lot. We've covered a lot from beginning to end. Ultimately, I want to help you understand your funding roadmap in 4 phases. So you got phase 1, which is clean and align. You need to get access to your credit reports. You're going to make sure that your name and addresses match everywhere. And if there's any negative items, this is the phase that you're going to work in, right? Phase 1. And you're going to work in phase 1, and you're going to stay in phase 1 until all of that information is done. Then you're going to work over to phase 2, which is stabilizing and preparing. So that's ultimately paying down your card balances, making sure that you have your bank accounts open, and gathering all of your key documents. Then you're going to get to phase 3, which is verify and plan. This is where you're going to identify your strongest reports. You're going to map out which banks to approach and when. And then you're going to go through a process to get pre-qualified for that particular bank. And then you move on to phase 4, which is actually executing. It's applying in a smart sequence. It's loading the results, and it's adjusting based on the results that happen. And then ultimately, you're going to plan your next round. Remember, when you have business funding, when you have a business, You can establish multiple relationships. A business can be established in multiple states and create relationships with multiple banks. So when you realize this, you can realize how you can begin to leverage business funding for multiple rounds, right? Now, which qualification path actually fits you? The thing that you have to realize that I've summarized is you want to look at access to capital as the 3 C's. You've got credit, which is credit-based financing. You've got the cash flow, which is the revenue or income-based financing. And then you've got the collateral, which can be the asset-based financing. So generally, I hate talking about credit scores. If you haven't gathered that yet, I like talking about profiles. But generally speaking, if it's credit-based, you want to look at a 660, well, 680 plus generally. 660 may be workable depending on the profile. If it's a credit profile or a credit score that has like a 660, generally speaking, if it's just like utilization, some highlight credit card balances, there's some strategies that you can use to put yourself in a better position. Excuse me. 680 generally would be a much stronger profile. And then 700 plus typically would open up the most options, right? You don't want to have any recent derogatory information or late payments. Again, you want to have an established payment history. Utilization, just like we talked about earlier, 30% minimal. You want to be under 30% minimal at the time that you're looking for access to capital, but below 10% is more optimal. And then a limited recent inquiries and new accounts, just like I talked about before. You really want less than 3 inquiries within the last 6 months. The least amount of inquiries, the better, right? Now, then you can look at cash flow or collateral financing. You can look at your personal income or business revenue that actually supports the payment or the repayment request that you have. It is going to be document based. So you're going to need things like pay stubs, bank statements, tax returns, things of that nature. Sometimes the lender will ask for a profit and loss statement or known as a P&L. Collateral based financing, you can look at things like equipment, real estate, account receivables, or if you have like a stock portfolio, retirement account, and an investment account, something of that nature. And then you can also use other qualifying business assets as well too. Now, remember, you don't need every qualification path. You need to pick the right one depending on your particular situation, or you can combine some of them in some scenarios, depending on how much capital you're looking for or that particular lender. But generally speaking, choose one, stick with that path, and find the best products and programs that work for you. Now, documents, when we talk about documents to have ready, these are the documents that you typically want. So on the personal side, you want to have your government issued ID, you want to have your proof of address, you want to have your personal income documents if required, and then you want to have your tax returns if required as well too. On the business, you want to have your EIN letter, like I talked about earlier. You want to have your articles of organization for an LLC. You want to have your articles of incorporation if it's a corporation. Sometimes certain banks will ask for an operating agreement. An operating agreement is a document that governs how the business actually operates and who the controlling powers or authorized members are. Business bank statements, financial statements when required, and ownership information. And then the request, you want to have your clear business explanation, your requested amount, your specific use of funds, your expected business result, so a timeline and plan what you expect, and then a repayment plan to make sure that you can be able to pay that back, right? So very simply, you always want a good explanation of your business and the intended use of funds. Now, just like I talked about earlier, fundable is step one. You have fundable, you have scalable, and then you have buyable. And every business, regardless of where it's at, it has an exit plan. The business is either going to thrive and it's going to grow and be able to be passed down. It's going to sell, it's going to acquire other businesses, or it is going to close, right? Those are the results of the business. So you have to understand what your exit path is, right? So fundable is step one. That's the standard. The owner and the business can access capital. Then you move into scalable based on what you do with the access to capital. So this means the business can actually handle more customers, it can handle more revenue, and it can handle more volume without breaking. And then the other phase is buyable. This is when you have predictable cash flow, systems, documentation, team, and value that can transfer to another owner. The objective here is to build a company that is buyable or worth it for someone to buy, right? So the question that I raise is, are you only trying to fund a business that you currently have? Or are you thinking about building a company that someone else would eventually want to buy? I want you to think about the latter from the beginning of actually being able to access capital. This is why I talk about funding being the standard, not funding being the finish line, right? So let's look at which stage you are in. Number one, and regardless of where you are on here, you can move to the next phase, right? So number one, you might not yet be fundable, but it's better that you have the information on what you need to do so that you can actually position yourself to get funded, right? So if you're not yet fundable, you just have to go through that preparation phase with a clear improvement plan, right? Number two, you might be nearly ready. So you might not be all the way ready, but you're closer. You got one or two things you got to fix, and then you can actually execute on the funding. Number three, you're actually ready to apply. You're in a position, whether credit, income, cash flow, or both, and you know the correct products, you know what institutions, and you know what sequence that you are ready to get. Number four, you may have already been funded. So you're already funded, but you might still be constrained. So the challenge now might be deployment, might be operations, might be system or capacity, right? So you may be funded, but you might have to fix other things in the business. This is why I gave you that chart earlier. And I said that you have to know where you are at which stage in business. And then number five, you actually might be ready for the bigger play. You might be positioned to scale. You might be positioned to partner. You might be positioned to acquire, or you might be in a position where you can actually prepare your business to sell, right? Prepare for an exit. So the next move actually depends on the strategy, right? So how we actually help. So there are 4 ways that we support the funding process from review to execution. These are pretty much the way that it works. So you get a personalized funding review. You need to understand what your qualifications are. You need to understand what your options are, what your obstacles are, and you need to know what paths are available to you. Not all paths are available to everyone. It really depends on what is going on with your particular situation, right? You got your custom funding strategy. You need to identify the appropriate products, institutions, and application sequence. Preparation and support. This is where most of the work actually gets done. Guidance around documentation, utilization, inquiries, business setup, and lender readiness. So all the things that I talked about here. And then again, the strategic execution. So being able to move and actually being able to execute on the funding process with an organized plan without actually applying randomly. Now, sometimes there's the latter. So sometimes you might already be funded, but you're ready for the next phase. And for established business owners, for someone who already is established, if funding is not the only constraint, we can help you identify what other areas for capital deployment, helping you establish infrastructure, consulting, partnerships, or acquisitions, right? So that's typically the way that we work. Every information that I've given you here today, you can execute on your behalf. But the most important part is I want you to execute. So oftentimes people will ask me, they say, hey, Dorsey, I love the way that you break down funding. I would love to work with you and your team. And I love to be someone who is super transparent, right? So if someone wants for convenience or just for confidence while going through the funding process, we do offer a done for you service, which we can help with all of the different levels of this. To work with us, we do charge a $500 deposit. Understand that is a deposit to get your services started. That is not a $500 fee additionally. that is credited towards. And ultimately what that does is that activates your file and allows us to begin the work. Now, understand the way that we work is a performance-based organization. We like performance-based models because it puts us in an opportunity to work together where our intentions are aligned to help you get the best results that you can receive, right? So the way that we work is on a performance-based model. Standardly, we operate on a 10% performance-based model, which is paid after you get access to the capital, right? Now, what that typically structures or what that structure or covers is the onboarding. You get a client portal, training and resources from me and my team, working with you from one-on-one to start to finish, all of your file reviews, anything needed for funding preparation, and all of the strategy and support required to go through the process. As just like I mentioned, why is the model actually structured this way? The deposit actually confirms commitment and supports the work that becomes that is required before the application is being able to submitted. And then, as I mentioned, the success fee keeps our compensation aligned with the results. So these are, if someone is, or if you are interested in working with us, this is the way that it typically works in order for us to get done. Something, regardless of whether you want to work with us or not, something that we offer is a free call. It's an intake call, which basically, if you're in a position today and you don't know where you're at, we offer a free intake call. So this is my gift to you. Christina in 7 Ways will put a link in the call. If you're not sure where you're at, if you want to kind of figure out, hey, is this something that you want to do, or really understanding what your first steps to get funded are, this is what our gift is to you, so that you can figure out the first steps for you to get funded. Right now, after you book, very important, when Christina puts the link in the chat, you can use that link. You will be able to get in contact with our team immediately. Very important, when you book, check your email. Now, if you don't see the email immediately, check your spam folder or your promotional folders, because in there's going to be some videos that I personally shot that set all of the expectations and walk you through step by step what needs to be done in order to get through your appointment, right? Now, understand our support process is primarily text-based. So when you book your appointment, you're going to get an email and you're going to get a text. Please do not respond to the team via email. Only respond to them via text. You can respond to the number that texts you. And yes, a real person will get back to you in the order that it was received. Now, understand, we work with a lot of clients. You're probably not going to get a response immediately. Typically, on average, probably take you about 3 to 24 hours to get a response when you communicate with our team. Now, understand what you're scheduling, because we're giving you the intake call for free. We have some expectations, and I want to make sure that you understand what those expectations are. So when you schedule the intake call, it is scheduled for a 30-minute on Zoom. No, the team will not do it for you, on mobile. No, they won't do it with you over the phone. It must be on a Zoom call, right? Next, very important that you join on time. As I talked about earlier, be on time or be early for your appointments. We run a professional firm. We expect everyone that we work to carry themselves to a professional standard. So you must be at a computer as well too. For those who are not familiar, or you should be familiar with computer setups or mobile setups, sometimes mobile just gives you some issues that are easily fixed when you're at a computer. And if you're at a computer, the process is much, much smoother, right? So you must be at a computer. And yes, if you're looking for funding, you will have to share an information where we walk you through to share your credit report and your business information. So you must have all of your personal and business information ready. Yes, our team will walk through you with one-on-one, but if you're not willing to share that information, there's nothing that we could do in order to help you figure out your first steps to get funded, right? Now, any questions? I do leave time at the end for questions about funding, preparation, or what your next move could possibly be. So I will open that up now for questions to clarify if anyone had them. And let me just double check this. There we go. All right, so I will leave it open. If you do have questions, the only thing that I ask is that you ask one question, 2 questions max. And then if someone else, or if you need additional help and someone else doesn't ask, then you can hop back in line. So let me see. I will also check the chat as well too. And then someone can raise their hand if you have a question. All right, checking the chat numbers. All right, appreciate it. Standard. What if the utilization is high? So Steve asked a question in the chat, said, what if the utilization is high? Something that we typically do, if it's just utilization and everything else is good, typical product that someone would look at is a cash loan, like a personal loan, for example. Go get a personal loan or apply for a personal loan, and then you're able to consolidate the utilization into a personal loan, so that utilization does not affect you. Typically a much better strategy based on the clients we work with. Let's see, scrolling through. Last time you spoke, I tried to get an appointment, portal asked me to provide a report. I was unable to move forward. Is this the same procedure? So Pete said, last time you spoke, I tried to get an appointment. Portal asked me to provide credit report. I was unable to move forward. Is this the same procedure? So yes, we would have to have a credit report. But when you schedule, you're scheduling with someone one-on-one for our team. So they would be able to walk you through that process or address whatever issues that you're having. But yes, you would have to have access to the credit report. Basically, the way that we kind of like, the credit report, the funding, I get this question a lot. Just kind of a short comparison. Basically, the credit report is to us as a funding company as like an MRI or an X-ray is to a doctor, right? So when you go see a doctor, you wouldn't just say, hey, this is my problem, just start doing surgery, right? Like they're going to verify what is actually on there so that they can be very strategic. So that's kind of the same process with us as far as being able to review the credit reports. But yes, our team is really good. So if you're having technical issues, you should be able to walk through it. Ray said, how difficult is it to obtain an SBA 504 loan? Should one not apply for credit cards while looking for more resources from other avenues? It depends. So SBA 504, anything SBA is going to be document heavy. So they're going to go through, SBA pulls in a lot of factors. If you're looking for a commercial building, that's going to bring in something called DSCR, stands for debt service coverage ratio. So it's a mathematical equation that they're basically running to see how stable the business is that you are, either the business or the building that you are acquiring. And so with SBA 504, it is a valid process. It's a valid program. They're just going to ask for a lot of documentation. So and SBA, you do have to be really qualified for. So SBA is not really something you go to if you don't really have established credit or established financials. They're going to do credit checks. They're going to pull, tax returns, all of that. So SBA is great. If you're in a position where you think that you are established for SBA and that's something that you want to look at, definitely do the SBA. If you're going down an SBA process, they are very particular. So you pretty much only want to be doing SBA when you're doing an SBA process. I hope that clarifies your question, Ray. Frederick actually raised his hand. You can unmute and ask your question.
All right. Good evening, first of all, and thank you. From your last class, I seen where you mentioned again this evening about having your name the same across different, like the credit platforms and everything. Right. And after you said that, I looked and yeah, my name, I'm the fourth amongst a junior and everything. So long story short, my name is spelled different on a lot of stuff that I didn't do. The people at these places did that. I have to go to each and every one of these places and like, hey, change my name to what it should be, or spell it correctly.
That is
Oh
correct.
man.
So
So
the
when they go
first,
back and look at all the previous years, I'm seeing that those different name spellings are called aliases. So it's a lot of
Mhm,
aliases on my reports. How do I fix
right.
that?
So so there's two ways. You want to make sure the first thing that you want to do for any account that's yours and it's on your actual credit, that's on your actual credit report, you want to call those places first and make sure that they have the correct spelling of your name, your up-to-date address, all of that. Once you verify the places that you actually have accounts with are all accurate, then you're going to call TransUnion, Experian, Equifax, or any other place that there is a misspelling or an alias. And then you're going to provide them the documentation of who you are, and you're going to have them delete or remove the other inaccurate spellings of your name. So you want to start with where
Okay.
you have accounts with first, and then you want to call each credit reporting agency themselves.
Oh man, that's some work. But you know what? I'm here to do it. Thank you very much, Mr. Dorsey.
Of course, you're very welcome. It is work. That's what I do tell everyone. Like, funding it's here, it's real. Businesses have been doing it for a long time, but it is work. It does take real work. It does take real structure in order to get things done. Ray said thanks. Of course, you're very welcome. All right, I got a couple more minutes. Any other last minute questions? Any concerns? Anything anyone has for me that I can verify for you tonight? I'll get another sip. Well, I hope that this was valuable. I hope that you all enjoyed it. I hope that this was very insightful and that you understand how to actually position yourself for funding, and that funding is only the first step. And there's so many other things and so many other processes afterwards that you can actually do to deploy to actually grow your business. So with that being said, 7 ways. I don't see any other questions. Christina, I appreciate you. I would love to work with everyone here, and I'll definitely be back soon.
Thank you so much, Mr. Dorsey. We appreciate you so, so, so much. Everybody, can we please come off of mute and say thank you to Mr. Dorsey for him being here tonight. He has the busiest schedule on the planet and he made time for us. So please come off mute and let's say thank you, thank you, thank you. You
Thank you, Mr.
always
Dorsey. Appreciate it.
I love y'all. You're
Thank you very
welcome.
much,
Thank
Mr.
you.
Dorsey and
Thank you
Christina.
so much, Mr.
Of course.
Dorsey.
Thank you.
Yes, we
Bye.
Thank
appreciate
you. Thank you very much.
Thank you, thank you, thank you. We appreciate you so much. So those of you guys, please go ahead, click the link inside of the chat so that you guys can get in contact with Mr. Dorsey and his team so that they can see where you are. Just like he said, right? Your credit report is like an X-ray or an MRI for the doctors, okay? So we got to be able to diagnose what you got going on, and that's the first step so that you can begin to work with him and his team. So I am so, so, so grateful because the information that he dropped tonight was so valuable. And I hope that you guys take action, because what you want to do is be able to get the funding that you need, okay? You want to be able to leverage OPM, the bank's money. Do that because that's what they're doing. They're leveraging your money, right? Do you know that every single time that you deposit money into the bank that is a loan, you are giving them a loan. So in reverse, they need to give you a loan or a line of credit, right? So without further ado, we are going to conclude our masterclass for this evening. I love you guys so, so, so much. We do have a live Q&A on Thursday. So if you have any questions regarding your trust or the entire process, come join me on Thursday. I do have to change the time. So the time is going to be 5 p.m. Eastern Standard Time. Usually we have it at 7 for those of us who, work 9 to 5. So usually we have it at 7, but for Thursday, I'm going to have to move the time to 5 p.m. So please come with your questions and your strategy so that I could be able to assist you. And just know that my team is here to support you throughout this entire journey. Okay, so please be patient with yourself. Just know that it is a journey. It's not a sprint that you have to get to the finish line tomorrow. You want to be able to build your foundation, and you want to build it right the first time. So join me on Thursday at 5 p.m. Come with your questions, come with your structure, and get clarity. I love you so, so, so much. And you guys have a good evening, and God bless you. And I'll see you Thursday. Bye.